Investors are sifting through a slew of earnings results, and to add to that, the latest GDP report offering an important read on Canada's economy. So for more, we are joined now by John Zechner, chairman and founder of Zechner Associates. It's good to have you join us today.
Hey, good morning, Lindsay. How you doing?
I'm good. I'm good. I hope you're doing well, despite all the news that's coming out today and this week. It's been a busy week, and earnings as well. So we'll start with Meta and Microsoft. I'm wondering, they've got this massive bet on AI and infrastructure. How should investors be looking at what we're seeing coming out of those two companies?
Well, it's interesting, Lindsay, because that really was a division in the performance of both of those stocks, after the earnings release. And clearly, investors are getting a little more skeptical about the spending on AI going forward. And, the amount that's been put in and the fact you got negative free cash flow from a lot of the big hyperscalers now, whereas they used to be big, free cash flow generating machines. And I think the big issue is, when are you going to start to monetize that? When are you going to start to see some results from it? And I think the reason Meta was sort of one of the few to go up yesterday, they really showed that they gave a revenue increase, and they're showing how their applications are getting sort of more use because of AI. Whether it's the built-in app, the WhatsApp, the Instagram, the Facebook, and all the associated programs as well, as opposed to Microsoft, which just continues to spend, and they're not seeing an increase there. So I think that's the worry. They want to see some absolute monetization, and how this is going to translate into revenue growth. And I think that's the thing. On the other side of the scale, you've got the worst performers are companies like Oracle, because all they're seeing is spending without any associated gains in revenue yet. So I think that's going to be the bit of the tug of war. And right now, the tech stocks have been really underperforming for much of the past 6 months. It's been the real economy stocks that have been doing better, and that's despite some decent numbers. I mean, you look at Celestica yesterday was down 16% on a beat and raise, but it's just how much longer can they sustain these levels of spending by their big customers? Apple, obviously, they had a decent beat because of iPhone sales in China, but then on the other hand, people are worried about the cost structures, and particularly the memory costs going higher. So there's a lot of balls up in the air right now, and I think the net is the stocks have had a fantastic run over the past couple of years, and people are becoming a little bit more selective about what's going to work and what's not going to work, and they're not going to pay for the big multiples for companies that are only spending and not seeing revenue generation.
Do you think it takes some time, though, when it comes to when we're talking about that spending? Or do you think these companies, I know we were talking about this at the end of last year, too, like that potential overspending in AI. Do you think companies have had that time and we should be seeing results by now?
Well, I think you're at that point where the question is coming up a lot more, and it's hard for anyone to know at this point what the ultimate productivity gains and the usage and the improvement in the revenue generation is going to be. But the scale is just so massive. When you talk about spending trillions of dollars in capex and data center increases and everything else, I mean, in order to get a normal return on equity or return on investment on this, you got to be talking about hundreds of billions of dollars of annual improvement, either in productivity, cost gains, or revenue gains. So the numbers are just astounding. So yeah, there might be a chance that they overspend. I mean, that was what sort of led to the end of the bubble in 2000 was the fact that you overbuilt fiber in the ground, and at points, especially when people weren't paying for it, these companies had to sort of take it in, and they started losing money, and that's when they all started dropping. I'm not saying that'll happen again, but there's going to be a lot more scrutiny on it, and investors generally tend to be where there are those kinds of questions. There's a little sell now and sort of look at it and make a decision later or switch to something else. And in the meantime, hey, commodity prices going higher, other stocks are looking better in the index, and that's why I think we've seen this shift in the past couple of months.
Okay, so interesting. We'll keep an eye on that. In the meantime, moving on from AI, Chevron also beating expectations despite some weaker oil prices. What do you think is going to be happening with that company in the near future? Or what do you think of their results, given everything that's been happening over the last couple of weeks, particularly in Venezuela?
Well, yeah, that's a good point, Lindsay. And I think that January 9th meeting in the Oval Office or wherever it was with the White House with, Exxon and Chevron and all those players, I mean, that was, they told the story as it is. We're not going to rush into Venezuela and start, spending tons of money and bring their, production back on. And Chevron and Exxon, we both reported this morning. And yeah, they sort of beat on cost cutting mostly and some better production, certainly not on stronger oil prices. But, Exxon is still was was basically, their production was confiscated. Chevron is still there to a degree, but there's no infrastructure there. I mean, how are you going to start drilling? You've got no power. You've got ability to go in. You have security concerns. So I mean, there are other places right now that I think these companies can make better economic decisions in terms of where they want to invest. And Venezuela is not at the top of the list, despite what Trump seems to want on that. So it's going to be a bit of a push and pull there. And he clearly continues to exert his influence on all of corporate America and in the corporate world. And we saw it again, this morning with Bombardier and other things like that. And he's certainly not going to take his hands off the wheel. That's not his modus operandi. But in the meantime, these guys are making economic decisions, and those economic decisions are saying don't go and invest in Venezuela right now until things improve dramatically on the infrastructure side.
You say there's other places that these companies should be looking at other than Venezuela. Just quickly, because I do want to get to CN Rail. What other places are you talking about?
Oh, you still got the deep basins. You still got natural gas exposure. You still got diversification. Some of them at point may look at alternative energy sources. Offshore drilling, other things like that. I mean, I don't think there's any shortage of places where they can drill in the world. So yeah, you got to take geopolitical risk out of the equation, and geopolitical risk and infrastructure risk are higher in a place like Venezuela. Absolutely.
Okay. All right. So now CN Rail, they reported a boost in profit and dividend. Do you think the company's heading for kind of greener pastures and stronger growth in the future now?
Well, the numbers were good, just like CP reported yesterday, and they're getting the cost under control, which is sometimes the only thing you can do in a slower growth environment is really cut your costs and bring that in line. And they're obviously all at risk for what's going to, the continuing tariff trade and those unknowns. But I guess the disappointment a little with CN Rail versus CP yesterday is that their guidance for the year was relatively flat. So maybe they're just being realistic. They're setting the bar low and hoping to sort of overachieve that. The rail stocks are looking a little more interesting to me than they have in a while. They had a premium valuation for a number of years, and now they're sort of mid to high teens earnings for I think decent growth going forward, and particularly in Canada on the east-west, because what we're seeing on the commodity side and our need to sort of get more products to market internationally. I think rail is a clear winner on that. So I've added to both of the rail names in Canada recently. I think they both look relatively good. They've been cheaper, and there's still a decent play on ongoing economic growth.
Okay, more news coming out today from Donald Trump as well. More threats, more tariff threats threatening Canada's aviation industry, a decertification of Bombardier planes. Do you think Bombardier as a company should be worried at this point or be worried about how they're going to stay competitive, or are these just words, do you think, from the president?
I think, Lindsay, they're more words. I mean, we owned this stock for a while, but we sold it last year, but that was strictly on valuation. When we bought the stock a few years ago, it was basically trading at 8 times forward earnings and 3 times operating cash flow. Now it's trading around, 13 times operating cash flow. So it just, it just had too good a move. Now, having said that, what Trump said this morning, that just seems like a really hollow threat. Like, first of all, the certification, he doesn't decide that. The FAA decides that. So that's a long way to go to say they're going to decertify those planes in the U.S. I mean, yeah, like I say, there's an organization, a body that will make those decisions. And in Canada, I mean, yeah, there's some decisions being made yet on some approvals coming in from the U.S. planes, but that just takes time. So Trump sort of just sticks his fingers in all of these things, and I don't know what he does in the middle of the night. He sort of seizes and he makes a comment and makes a threat. In the end, I don't think this is a very real threat. I think I saw Bomber stock this morning. It was considering how serious that would be, so given how many planes they sell into the U.S., the stock wasn't really reflecting those worries. So I think people are starting to take some of these pronouncements and slide. There is more of this kind of taco trade aspect to some of the threats that he makes.
It is hard to keep track at this point of all the talk and the rhetoric. That's all the time we have, though. John Zechner, chairman and founder of Zechner Associates. Thanks so much for being here. Appreciate your time.
Thanks, Lindsay.